Hello, welcome to our next episode in this series on cryptocurrency. I'm Garrett Konrad,
Mason Abishan.
and today what are we talking about?
Immutability today. How it is, why it is, can it be, what else is, what else isn't.
Sweet. So that's what we're going to talk about. Before we get into it, though, I will give my canned disclosure. So keep in mind that Mason and I are just having some general conversation about Bitcoin and stuff, and this is not recommending any specific investments or products or strategies or anything for you. We don't know your individual financial situation or anything. It's very important that if you are going to take this information and put it into practice, you may want to consider talking to your financial professional first or doing your own independent research or whatever that looks like. But keep in mind, we're not giving specific advice. We're just having some fun conversation and learning together, or at least I'm learning.
I am too, constantly. There's always something new in this market.
So with that, let's jump in.
So, immutability. Weird word, unique word. Done a little research on the word itself, and basically it's a philosophical verbiage. And the reason why is nothing in nature is immutable. So, Garrett and I were kind of chatting back and forth. What does immutable mean? In its purest form, unchangeable. So nothing in nature can, everything in nature is changing. So
Sure.
Immutability would be unchangeable. So
Yeah.
you can't achieve immutability in nature because everything is constantly changing, from the smallest things to the largest changes. Now, putting that kind of in Bitcoin terms, that word changed on January 3rd, 2009, because Bitcoin was released, opened, and public. And so it truly is the first thing in history to be immutable, which is pretty cool. So I've been diving deep into this one. I was letting Garrett know that I'm just moving further and further away from caring about the price. It's going vertical. We're going to the moon. I got my moon boots. I'm ready. But ultimately, I want to know, is the ship I'm standing on going to make it? Because if it's not, then maybe we'll just back out now and watch it tank to zero, like Peter Schiff says. But getting back to the scale, how do we make it practical? Why is Bitcoin important? Basically, you got things on the scale that would be the easiest to change, maybe your shoes, to the hardest things to change, math, although we're changing that.
Yeah.
But back to it, Bitcoin would be further on the scale. It truly is immutable, unchangeable. Now, I know there's some skeptics out there that think a 51% mining attack is possible. These things are technically viable, but the amount of energy that it takes to work all the way back to a certain block to change it is unjustifiable.
So can we go on a tangent and can we break down some of that stuff real quick?
Sure.
Should we define what a 51% mining attack is?
Sure. So basically, what we have kind of on the blockchain is a tamper evident situation where we can see if something changes, but we can change things. So especially while it's being verified, there's lots of changes, and there's lots of different blocks that are all doing the same thing. So one of them might find this road by taking a right, and another might find the same road by taking a left. Neither are wrong, both are correct, but we're just going to go with the one who gets there first. So that would be a way that we see two different things, a change, inside of a block that seems to be unchangeable, right? Because we're talking about Bitcoin as being immutable.
Yeah.
But once it's had the proof of work, then that's the point when it's been confirmed and it will never be changed again.
Yeah.
So why I said the 51% attack is possible, basically all the miners have to get together. You need a larger than 50% amount to make any change in Bitcoin. And that's, again, you're probably not going to get most of the miners to do it anyway. But the amount of energy it would take to work backwards. Let's say we wanted to work backwards 3 weeks ago. We want to change. Somebody bought a car and we want to just say, no, they didn't. You got to work back from the block that is today, change the one that was yesterday and the one before it, and work your way all the way back. Then once you get there, you have to verify everything that was after it as well. It's a pretty complicated system. You actually have to do tangible work. Tangible work requires energy. Where we are, electricity. So it's a certain amount of dollars that it takes to get to work back, change it, and work forwards. Again, thinking about the 51%.
And those blocks can only be changed by the miners specifically.
Yes. So you're right. We are down a rabbit hole now.
Yeah, and I feel like I'm going to take us really deep down the rabbit hole
That's
because
all right.
this is
That's
like
all right.
way off topic of anything we're going to talk about, but it's actually something that I know nothing about, that now I'm on a tangent.
Yeah, so each miner has their rig, their CPU that's doing the work.
Yeah.
That's solving the algorithm that shows that this coin came from this wallet and it went to that wallet. That, let's say that miner gets the verification, he's going to get the block reward, or basically the change that's left over. Millibits or Satoshis left over go to him. That's his incentive to mine, is to get coin in return, which is a unique part of mining, because at some point in a few years, like 100 and something years, there won't be any incentive. There won't be any validation coin. So then it's just going to be verification, validation and verification, which is security. So each miner does their security and verifies a block, and then it goes into either layer 2, a different, or the next block in the chain. And so it can only go to the next block once the nodes have been verified inside a certain block and miners have checked it. Basically, It's a check, it's a double check, and then we go into a new block.
And do we know how many miners are within the blockchain ecosystem?
Yeah, it's an ecosystem. You're absolutely right. And no, it's an ever-growing number. One of my friends just recently got into it, and he's sending me all kinds of fun pictures that I don't understand. I'm not a miner. I would love to be in the future in order to verify my own transactions. It's definitely a goal of mine, but I'm not quite too techie, and some of the new components have gone up huge.
Yeah,
like a regular,
sure,
I think
I
they were
bet.
like $100 and something components. Now they're $1,500, and you can't find them. So if you had 10 of these things, either sell them and make good money, or just start 10 miners, maybe sell a whole mining rig. So I'm kind of waiting to do the big deep dive into mining, but I would love to verify my own transactions, because then you can truly know. Let's say I'm going to sell my house or my car for Bitcoin. I can sit there and wait for 40 minutes until I have physically verified that money, or not money, that Bitcoin has gone to my account.
Yeah.
Interesting fun fact about Bitcoin, it's nothing, right? We try to think of it as money, but it's not.
Yeah.
It's just a number on a screen, what money has become. Bitcoin never moves anywhere. It's never been anywhere, it's never going anywhere, and it's never transferred. It's just simply the numbers on the screen. The proof of work that says 0.01 left this wallet, he had it originally, that's been verified, and it came to this wallet. This wallet had a certain number X, and now it has 0.01 more verified. And now this person can send that to somebody else because it's been verified.
Yeah.
I say verified, and that comes from the algorithm. So the algorithm has basically been solved, it's been sent. The verification process kind of happens along the way. In the Lightning Network, it's basically immediate. That way we can move closer to spending Bitcoin at Starbucks.
Yeah.
But basically, when you get into bigger sells, purchases, you're going to want more confirmations. And you can sit there and wait 10 minutes to get 2 confirmations. You're pretty safe after 2 confirmations, because again, we're getting back to the energy thing. It's going to take too much energy to work backwards in order to change it. Now there's a certain thing called double spending, where like 2 stores next door, one sells a $2,000 item, the other sells a $2,000 item, they both pay in Bitcoin, and the miners don't necessarily know which is which. So one of them can get confirmed and the other one will basically fall through back into the mempool, as it's stated, which is a transaction that's waiting to be verified. So it's called a double spend. It's out there. It's a slight problem, but basically you just need to do your due diligence and wait for 3 confirmations. So as the price number goes up or the value of something you're buying goes up, you just wait for a few more confirmations. So 1 confirmation, cup of coffee. 2 confirmations, something $100, maybe to $1,000 or less.
Like a new computer or something, and then
there you go.
You're not buying a car without a good 30 minute
3 confirmations, and 3 normally takes about 30 to 40 minutes. Yes, sometimes faster, but normally.
So how long are we gonna wait to confirm a transaction to buy the first house completely with Bitcoin?
I think it's already been done.
Oh, really?
Yeah, and I think a church has also been done in Europe or some other country, and I have heard that 1 confirmation should be sufficient. It's been verified, it's done.
Yeah.
But to jump past the double spending, 2 is great. 3 strikes you're out, right? Now we're talking about a serious amount of work to go backwards. You'd have to be real knowledgeable, and really on top of it. Also, you'd have to have complete negligence on the other side to not be able to see what is going on while the change is being attempted. So the 4th verification through 6th are you're just double stamping, triple stamp, a double stamp, kind of thing. So a fun fact about these older blocks, or maybe that old church that was sold, is it's still being verified. Each new block that's added, each new layer that's added is another verification. Why? Because you'd have to work backwards through those verifications to get there.
That's why we have the blockchain and not just individual blocks floating around stuff.
Yep.
Yeah, that makes sense.
Yeah, and there's quite a few different unique properties to Bitcoin's blockchain compared to other coins' blockchains. Now, there are some other coins' blockchains that are built off of it, just like Ethereum has tons of other coins built off its blockchain. But Bitcoin's blockchain is unique above all others, in my opinion, because of this specific immutability situation. Now, proof of work, I kind of went through, or at least touched on it, it's the actual finality of the transaction. So it's not a new phenomenon. It's been around for a long time, right?
Yeah.
Tall, pointy proof of work in Cairo. We see it. The pyramids are there. They're not really going anywhere. They haven't in a certain amount of time. Probably won't in a certain amount of another time. And it's a fact. It's also a declaration, right? The king wanted to say, hey, this is how big I am, and this is how long I want to last, and nobody could change it unless they're much bigger and want to waste a ton of time changing it. So I use that comparison, and I stole that from Andreas Antonopoulos. Thank you. Shout out. Best guy in Bitcoin. Everybody should research him. I steal that because it's exactly how Bitcoin is. You'd have to be a much bigger, better blockchain and then waste a ton of time to go backwards to change anything. To do what? Say that you tore down a pyramid? I don't know if that's even valuable. So what would somebody try to do? Build a bigger one. Well, no, I don't think anybody's building a bigger pyramid. We've changed to different construction designs and stuff like that. But I kind of see that as a nice simulation to what we're talking about here in Bitcoin is actually relating it to something physical that people can go see. And when you see them, it's like, wow, that's extreme. And I think that when people realize what immutable means, they're going to understand that this is historical. And we're only a few years in, 10 years in, so it's not historical yet. It's not monumental yet, but when it is in 100 years and we look back, it's going to be that thing of, wow, whoever was a part of that building or that pyramid understood the value originally. That's why they took the time to build a strong foundation, because they knew how high they were going. And that's where I'm at right now. Is I think that we should all be worrying about what is immutable, which coins can be hacked, which coins are built on the Bitcoin blockchain, what layers are they, and what layers are we using before we worry about the price and how much money we're making and what percent, because yeah, all of that's great, but if Bitcoin can just crash in a month or a year, like my boy Peter Schiff says, then we should all just cash out now. It's useless. I'm in the long-term game. I have 100% of my savings in Bitcoin, and I plan on continuing using it as a savings device, basically just to hedge against inflation, but I trust in the long term of it, and I try to spread that trust to everybody I talk to, basically everybody. It's a good conversation starter. It's pretty fun. In Home Depot, I pay, you accept Bitcoin? No. Do you know what it is? No. All right, we'll check it out. Bye.
Yeah. It was a good conversation at my barber shop, because I went to get my haircut this week, and I sat down in the chair, and he's like, "So I heard you're starting a podcast," and I was like, "What?" And I was thinking, "Oh, the video series." And he was like, "Yeah, Mason was in here just a couple days before you, and he was talking about Bitcoin." So it's become a conversation starter for me now, just after you have already had conversations with those people.
Nice.
It's really funny.
Nice. Shout out to Alessi's Barbershop.
Yeah.
Local. Awesome.
Good haircuts.
So, what is proof of work? Basically, it's consensus algorithm. That's not very basic. That is what it is at its core. So, Satoshi Nakamoto didn't create proof of work. That's been around a long time. But what he did compile with proof of work is a consensus algorithm. And so when we see the miners solve this algorithm using energy and paying for it, and that's kind of a unique part of mining is lots of these miners are paying every day to try to solve an algorithm that they may never solve. If you've got a slow computer or an ultimate fast computer, you might just always be outpacing or underperforming. So it's kind of a race to see who can get the cheapest electricity to mine the fastest to be able to get the most rewards. And it's a big explosion seeing some of these mining outfits and companies fighting to get the most rewards. So, it's immutability is a new concept. Proof of work is not. But the combination of them using the consensus algorithm is what ultimately that's what created Bitcoin. And Bitcoin, a few little back notes on it. Uppercase Bitcoin is the network. Lowercase Bitcoin is the coin itself, the monetary aspect. Space coin? No. Just never write it that way, and we'll know that you're not in the space if you do. So don't put that little space right there in the Bitcoin. So that's a fun fact about it. But
I feel like I capitalize it every time I've written it out.
Yeah, well, you're talking about the system then. So just understand that we're talking about the miners doing their thing through the algorithm solved, solving like inside the blockchain.
Like not physical, but digital Bitcoin.
Yeah, the currency, basically. So moving forwards, unlike the pyramids, Bitcoin serves a purpose. A pretty big purpose for some.
The pyramids are there to support tourism now.
Yeah. All right. So how about more of a practical purpose then?
Yeah. Okay.
And the practical purpose goes a lot deeper than for some than it does for me. For me, it's I feel safe storing my savings there. I feel safe to trade it. I feel safe to share the information to allow other people to get involved and helping people get involved. Because it's a little bit nerve-wracking when I'm helping people invest their savings in something that theoretically could be 51% attacked. I don't want it to all come crashing down and then a whole bunch of people are calling me. But I feel confident. And as I research more, I realize that each node has a very specific place, and the amount of energy it takes to backtrack any of this is just not worth it. Even for like big governments or something who have hundreds of billions of dollars to change something like this. I just feel confident that no one's going to even try. And most of the miners are there for the security. So you're just not going to get miners to agree to change something that they already spent money to not change. Yeah. So, and as you research more into the immutability whole, you just find that there's more and more evidence that in its own way is more proof, more facts that this thing's not changing. And not only is it not changing, but we're building a foundation now that's going to be infinitely stronger and forever getting stronger, which is the cool part, I think. It's an infinity. Miners are going to keep mining for the security. They're going to keep mining for the reward short term, 100-year short term.
Yeah.
And mining in the future, like I said earlier, one of my goals is to mine myself so that I can verify my own transactions. So at that point, I don't care about getting Bitcoin in the transaction. I care about selling my house for Bitcoin and making sure that transaction is done.
Validating that you actually got what you expected.
So I think that after the coin is the incentive. Basically, the coin was the incentive to get miners to start.
Yeah.
And to mine at a loss, because lots of miners are mining at a loss, especially in bear markets. And it's really interesting to see. There's a couple mining charts. You can see who turns and turns off their miners. You can kind of see how many are active and how many are available but turned off. And it's can't remember the chart's name, but I'm sure you guys can find it. So it's mining algorithm, mining, I don't know. It's out there. It's unique.
It's interesting.
It's cool to see that people are willing to mine at a loss. And I think that those kind of people are relating back to last episode. They're the diamond hands of miners. They're never going to stop. Well, how do we know that? Well, they lost money for an entire year straight in just the most recent bear market. And they did that because they knew a couple of things. A, the price is going to come back. B, they wanted to continue securing it. And I think that when you're invested in something like that physically, you have more of a relationship to it. So I think they might have been a little bit further ahead than people, again, who are just worried about the price, who are just sell on the way down, or short on the way down.
Yeah.
So, let's see. There were lots of algorithms proposed originally, which is an interesting thing. I've dove into Satoshi pretty deep, and I'm still looking for more information on him. But he had a group of like 7 people that he emailed back and forth, Hal Finney and a couple other guys, Vitalik Buterin and other characters, and they had lots of different consensus algorithm solutions, but it seemed like he went with the best one that mathematically worked over the long term. And it's pretty cool to see how 21 million Bitcoin breaks down into Satoshis, breaks down into millibits. And it seems like he meant for this to start at 6 cents or whatever it did, something near zero, and build to a point where when Bitcoin hits a 10 million price point, that the Satoshi will be worth something reasonable like $1 or $10 or $100 bill. And these millibits are going to be the $1 or 1 penny.
Yeah.
So that everything kind of spans out. And it's pretty cool to see that they were thinking about this, probably 20 years ago. I would say it probably took him 10 years to design this, and he probably waited for the perfect 2008 crash to implement. And that's my little side thought.
That's an interesting theory, yeah, because like it could have been an idea born in the 90s or like through the dot-com bubble, and then there was just like build up leading up to some opportune moment to launch it, which could have been 2008 or some other catalytic event if 2008 didn't happen.
And I think we're in another cataclysmic event today where 1.9 trillion just gets accepted and nobody blinks an eye.
Yeah.
So I guess we'll go through the signing here soon and see when that happens, and we'll all get more stimmies, and it's only going to cost us $5,000 to get 1,400.
Yeah.
Great. Sign me up. That to me is a system that's broken from the top down and can't be repaired. I think that we've printed 25% of our entire debt in the last year, somewhere around those numbers. Don't quote me on that.
And if you want to see the current debt, you can go to, I think it's usdebtclock.org, and I checked that out. I think we tipped, assuming that this bill passes, I think we're going to tip 28 trillion.
I thought it was 30.
Or, oh, well, we hit over 30
might
already.
be 30.
Dang.
So it's important to, and these numbers are huge, right? What does that mean for us? Well, the U.S. is still a super strong economy. Those stimulus checks are going to go back into economies to a certain extent. Maybe half goes into the markets, stock markets, and then some gets saved and some gets spent actually to live or pay a mortgage, right? But even as a strong economy, we're only bringing in a certain number. I don't know the exact number. I think it's 1 point something trillion, but our debts are much greater than that. And we were at a point when it was only about a 10% swing. After this bill and the accumulation of last year, now we're at like a 50% deficit. So basically insolvent, 100% insolvent. So what is, I just kind of, I'm wondering I'm not excited to see how it plays out, but I'm really interested and intrigued to see how it plays out. It's going to change. It's going to change everything.
Yeah.
And
I don't think anybody wants to be the bad guy to actually have to fix the problem, because I think it's inevitable that we start seeing like tax rates hike across the board for like everybody.
Yeah.
And I think it has to. Like, I think we're well beyond the ability for a progressive tax system and taxing corporations more and that kind of thing is going to solve the problem. I think we could see like 40 and 50% flat taxes across everybody just to start putting a dent into it. And even that would be quite a long payback period probably. But I don't know. I haven't really dug into the analytics since the COVID crisis, and I haven't really put much thought into that. That's like getting off on a whole different tangent now too. Do you want to go down that rabbit hole on this video?
Yeah, I think that I've done a certain amount of research on the immutable topic, and it does get more technical into the nodes and how very specific things are validated from the mempool actually into one block and then verified inside the block into the chain. But it's not really interesting entertainment. So if anybody's more interested in that, please contact me, get in the comments, and we can dive down that whole private one-on-one. But as a whole,
or maybe we'll do like a separate video on it and just do like a little subset in the series, and we can do like a 10-minute power video on that one.
Yeah, and we could even go off on how it's portable, it's fungible, and a couple other defining words that are what uppercase B Bitcoin is. Yeah. So what was your side note?
Well, I didn't know how far we wanted to go down that rabbit hole, but one of the things that I always look at is the U.S. debt per citizen and the U.S. debt per taxpayer. And that number fluctuates a little bit here and there, but last time I looked, it was somewhere around $224,000. Wow. And so you think about when you hear that comment, like everybody needs to pay their fair share, that's kind of what our fair share is right now. Each one of us is $250,000 in debt just to get the U.S. debt paid back. And so that's a really scary number, and that's what leads me to believe that tax rates will be hiked and things like that. Yeah. And I think a lot of that is what adds more fuel to why people are so interested in Bitcoin. And I don't know that it's going to be a great tax shelter. I'm sure governments are they've already started to figure out how to tax it, but I'm sure there's going to be a lot of tax overhaul and regulation on cryptocurrencies in general. Yeah. But I think it is a concern with like inflation and things like that. People are looking for alternative places to park their money. Yeah.
I think it's a great alternative for a certain percent after you're allocated in other locations first. Like with you, standard investments, physical, tangible, something like gold.
Have your foundation done. We're looking at a lot of that right now too. A lot of people are freaking out over the declines that we've seen in the market over the last week or two, particularly in tech. And they're looking for alternatives, and we're seeing a lot of gold. We're seeing a lot of REITs. We're seeing a lot of TIPS or treasury inflation protected securities. We're seeing value stocks over growth stocks. All those things are really popular places to kind of create that foundation first, and then you can start going into more growth stocks and tech stocks, and you can get into cryptocurrencies and alternative investments and all that stuff once you've built that foundation.
Yeah, so we mentioned last time that Bitcoin's in the speculative category of risk investments, and I've been doing some thinking on it, and it's just my personal opinion, but I feel like with what we just talked about, the debt, the personal debt number for a citizen, I feel like every investment is speculative at this point. What do you think about that?
I guess that's a really extreme comment, but I can see where you're going with it.
All
And
right.
like, yeah, volatility is way up. So that's true that a lot of people, especially younger people, I mean, you could be 40 years old and your experience, your entire investing career, like if you started when you were in your mid 20s to 30s or whatever, your entire investing career could be nothing but gains, really. In the grand scheme of things, if you didn't go through 2008. So you're very used to low volatility. You see your numbers go up day over day, week over week, year over year in some periods. And we've only had like 2 small periods of consolidation, and they've been relatively small and relatively quick. And then we saw COVID, and we had a very, very steep drop, but super quick. Like 30 days, most people were starting to become a lot more comfortable just as far as their investments go. And so I think that as things get more volatile, there is room for us to experience what true risk and true volatility is that we've seen through the 2000s, and we've seen in 2008, and we've seen prior to that too. Like there's periods of time where you can go 2 or 3 years with negative returns, and long term, it still has worked out okay to this point.
It's great accumulation time.
But yeah, like there's a lot of people who really don't know what volatility means and how, like, what that word speculation really means.
Yeah.
It's true that people are going to feel a lot more speculative about their lower risk assets too, pretty at some point.
Yeah, and the volatility is extreme in both directions, right?
It has to be.
Yeah.
Like that's just a rule of thumb.
Yeah.
Like you can't have tremendous gains and upside potential without tremendous downside potential.
Yep.
And people use volatility like it's a dirty word, but it's not. It's just movement. So
yeah,
volatility doesn't mean that you're going to lose 50%. Volatility means that the spread is 50% up or down, or, you know, whatever that standard deviation is. But
and I think that this topic is extremely important for obviously all markets, but specifically for Bitcoin, because we're getting tons of new investors, people who have no money in the stock market. Or just some, you know, they got their company match 401k or whatever, and they're just diving into Bitcoin, asking Facebook people, what do you think about this investment for 10,000? And I'm like, oh boy, I'm just so nervous for them.
Yeah.
Because when that volatility hits, not if, and they do lose 50% of their portfolio, they're just going to pull out and say Bitcoin sucks, it's so volatile, and we're just going to continue down this negative thought process. And that's what it is. You need to have the thought process that this is your savings, that this is your investment. Like we said, volatility is movement. And man, when the price crashes, I am pumped because I am buying more. And I have money sitting aside to buy more at all times.
Yeah.
And when it's launching out the roof like it is today, just touching all-time highs at 58,000, I think it hit 57.4 or something today, which is...
Dang.
I mean, it's the positive volatility we're waiting for, right? So I'm just swiping my Bitcoin debit card, spending money on it because it's the perfect time for me to spend a little money here and there, save a few percent. Later, volatility to downside, reaccumulate. Yeah. So it's just a little bit of the game, right? It's just a game. I think the government's playing a much bigger game, and we got to be aware of the larger picture game in order for our small little world of one to work coincide with the bigger game.
Yeah.
So that's what I got for Immutable.
We'll wrap it for tonight.
Thanks for everybody for tuning in.
Yeah, we appreciate the views, the comments, the likes, and we do want to engage. So if you guys have any questions, concerns, comments, anything like that, just leave it in the comments section.
Yeah, or
tackle those.
Or potential videos as well. If there's a specific topic that you feel needs to be covered like this one. Probably not going to do any altcoins for a while. We might do a specific something on alternative coins in the future, but for right now, it's all about Bitcoin. It is the most important, and none of the others would be here if it weren't for that. So,
Sweet.
See ya.
See ya.